that's also a fairly good transition into a few of the questions that I have to ask, and
Let's do it.
we've got about 10 minutes to do so. We last week got to sit down with Joe and Katrina, talk about property management,
Yeah.
and just the general day-to-day operations, across the last 30 years. We would just be curious to talk about, investment management, and really just how you're looking at multifamily acquisitions, dispositions, and the overall investment into a multifamily property or in the asset class. You had mentioned just jumping into multifamily, choosing the multifamily asset class to not only invest your own capital into, but to go out and raise outside capital to invest in the asset class. There's retail, there's industrial, there's, you name it, of different asset classes. I just found out about truck parking the other day.
Yeah. Man, I
So,
like truck parking.
what about multifamily caught your eye initially and was kind of the catalyst for the pursuit and the exclusive pursuit of where Gray Capital and you and Alex are investing your own money?
Yeah. I mean, I'd love to say that it was as sophisticated as a white. I put together a white paper thesis on how multifamily was a long-term short against the U.S. dollar and all this macro stuff, and but that wasn't exactly it. I mean, that concept definitely played a role. I was I had some experience investing in real estate, flipping houses, but I had started another business in the kind of the craft beer industry, commodities, selling hops and brokering hops. And I was growing that business and then learning more about that industry and realizing that that industry didn't have great long-term prospects. And so that's when I decided to start looking at selling that business. And as I was doing that, I was just thinking more macro about, what do I want? What industry do I want to, hitch my cart to for the long term? And I wanted to build a business. And what industry did I want to do that in? And I liked real estate. And so it really part of it came down to is what and I think it's why a lot of people get into multifamily is because they start in residential because the barrier of entry is so low. I don't think that's not unique at all. It's very kind of just straight down the middle of okay, well, what's the difference between an apartment and a house? It's most of them are built the same way. It's just you've got a couple more walls and a couple more entry doors and maybe on a few more acres, and eventually you need some people to help maintain it and operate it. And so the transition, I'd understood rentals and single family homes, and so that the concept was really seemed to be straightforward. And I started reading every book I could get my hand on, but then I got really deep on the Bigger Pockets website, and this was like 2014, time period, 2015 time period, when it was like a thing, but it wasn't as big of a thing. This is like when like Brandon Turner was still like actually working for Bigger Pockets, like he was kind of new at Bigger Pockets, and he had written a book, and people were writing books, but like the syndication surge hadn't happened. Like the term syndicator like wasn't like being thrown around a lot. Like it was a thing. Syndications, it's not a new term by any means. People have been putting together real estate private equity deals for years, but we have to remember that it was just in 2012 is when the Jobs Act was passed that allowed for like 506c exempt like real like offerings, private placement exemptions, or crowdfunding, in which that really, I think, accelerated this whole syndication boom. That was the catalyst. This is only like 2 or 3 years after that. So people were doing it, but not as many people were doing it then as today. And when I looked at an industry that we could be participating in long term, it was very scalable, something that we could understand. And I thought that we had an ability to generate really good cash flow, build wealth over the long term. So from like a personal finance standpoint for like me and my family, it seemed like a way to, again, coming back to Rich Dad Poor Dad Robert Kiyosaki, he'll tell you to, build a business that buys assets. And that's exactly, very simply, what multifamily is and what Great Capital is. Great Capital is a business that buys assets and accumulates assets.
Right.
We're not just a business that has like a product that we're selling and we're generating some cash flow. that individual apartment might be selling a service, as in the apartment itself, to rent. But Great Capital is really accumulating assets. We also have cash flow. We're generating revenue and cash flows through the services that we provide, which are like property management services or investment services. But the core concept is a business that acquires and builds assets over time for long-term financial security and financial freedom.
And just the exclusivity to the multifamily asset class, you could have, without going too deep in the history books, when you were doing, let's just use Pinnacle on Meridian as an example, was a condo deconversion into for rent, market rent apartments. That deal specifically is one that we've talked about that maybe cast some serious doubts or had some serious adversity in what you guys had to battle through. You could have pivoted and said, look, this multifamily thing, probably it's not for me. I'm going to go more industrial, more retail.
Yeah.
But being able to stick with the multifamily asset class, what was it about multifamily in regards to or in comparison to some of the other real estate asset classes that, really drug you in and captivated you and allowed you to not only experience Pinnacle and Meridian, but persist through that?
Well, I think the inelastic demand, and again, there's always a need for housing. The demand doesn't really change. There's always demand for housing. The supply can change. The demand changes a little bit. If you have no money, again, it can decrease a little bit, and the capacity to buy is limited to wages. But there's always a need for housing, and that makes multifamily very recession resilient. Not resistant. Like, you still have issues with multifamily, you still go through recessions, but it's a very recession resilient asset class, especially compared to some other real estate asset classes like office, for example, or hospitality, some types of industrial, some types of retail. So just that resiliency. And then again, I'm just learning a lot from my parents and my father in particular on, because I'm helping him invest into apartments at the same time and looking for asset classes investment that have like really low risk, but we can still make money in, and which that's like what everyone's looking for, right? But that's what we were looking for. How do we generate some cash flow that is very tax efficient that we can then multiply our capital over time, but take the least amount of risk possible? And multifamily really seemed like it was in the sweet spot. And in our experience, I can't speak for everyone because there are deals that have gone, not our deals, but there are deals out there, investors who have lost a lot of money over the years. But from my personal experience, the deals that I've chosen to invest in and have my family invest in, we've never lost a single penny investing in real estate. We've only made money investing in multifamily real estate. I think we're probably a little bit lucky. Probably chose some right markets. Probably got lucky with some right markets. But it's done exactly what we had set out for it to do.
Yeah.
And then also just multifamily signals of purpose. I mean, I have invested as an LP in some other deals, but Great Capital, I know what I know. We've been successful at doing this one thing. We're going to keep doing it. And it's easy to get distracted by shiny objects that are out here. There's a million different ways to do real estate. And I get asked every single day, hey, you want to partner on this project, this retail deal, this industrial deal? You want to sign on here if this creative? I'm like, incredible ideas, guys. I don't know anything about it. This is what I know. Right. This is what I do. I'm going to keep doing it until it doesn't work anymore. But fortunately, people are going to need a place to live for a long time.
We have just a few minutes remaining. Spencer's a busy man with a pretty booked calendar. I have one more question to ask, and you can answer it abruptly. We had a prospective investor come in our pipeline, quite interested in one of our acquisitions more recently than not. One of his criteria was, hey, I'm going to put my kids in the car. They're college-age kids, and then we're going to drive past the asset, and we're going to talk about it, and then I'll get back to you and make a commitment. And he was already personally convicted. He was in the deal. Yeah. He committed, but he wanted to show his kids, the asset and where that money was going. My assumption is that at some point in time, that interest in that project, whether it gets rolled into his kids' accounts or how he's just trying to teach them about investing in real assets, specifically multifamily. Your kids are probably, in my opinion, a little bit too young to be maybe fully getting exposed to real estate investing. What do you tell your kids that you do?
That's a really good question, because it's not that what we've done has evolved over time, but like how it's not as straightforward at like their grandfather is a doctor, and so it's like grandpa's a doctor. Like, it's really straightforward to say, it was a policeman, it's a firefighter.
Right.
Real estate, like what is a real estate, and but then it's even more complicated. It's like, well, yeah, we buy apartments, we fix apartments up. I raise money from investors, and then we also do property management. So I have three kids, 9, just 7, and 3. So the oldest one, they come to work, relatively frequently, not like
Right.
every day, obviously, but you've seen them that they'll come to the office with me and they'll see what we do, and they have my 9-year-old has a better understanding than most people, and she knows a little bit more on like the investing side, but for the 7-year-old, we haven't really got into it with the 3-year-old just yet.
Right. I can't imagine.
But it's we help people find homes.
Yeah.
We provide homes to people. And a 9-year-old, we get a little bit more nuanced on. We also help people take their money and turn that into more money.
Right.
We also help people find houses or find apartments, places to live, homes. We provide a service give them an apartment for them to live to. Our kids have come to our apartments. They've been to every single apartment of ours, but especially the ones locally. They'll come. They'll be with Alex or be with me, and so they've seen this. They've seen these apartments.
Mm-hmm.
They've seen where we do. We show them. Like we've fixed this up. We've painted this. We've fixed these buildings. These are the people that live there. I think it's still a little complicated to them, but at its core, so we're helping people or providing houses or housing to people. And then when they get a little bit older, we're also helping people take their money, invest it into the houses or apartments, and turn that into more money over time. And they do understand at a pretty young age that more money is better.
Yes. Yeah. Well, so, I would assume that's of
they like that part of
their best interest as well to kind of understand. I asked that question just, I think what you and Alex have built at Great Capital, it's obviously a great opportunity for you guys to continue to grow, your family's wealth and, preserve that over generations. And so when this prospective investor had mentioned that he's going to run his kids by the asset to just kind of teach them, I was somewhat envious that nobody exposed me, to this asset class or, real assets in general, until, I kind of discovered it for myself. And so I think it's an incredibly awesome thing that your 3 kids will have exposure to the asset class at such a high level, but also just a really good educator in both you and Alex as they persist and grow up. So I know we are over our slotted time.
We're good. Thanks, Griffin. Thanks for being on. This is a great episode.
Absolutely.
Hey, everybody, make sure if you're not subscribed to the Great Capital YouTube channel, you do that right away. Hit the bell icon to be notified, and let us know how's Griffin doing. I think you're doing a good job, Griffin. Come on a number of times, but also we've got a really good newsletter, Great Report newsletter. Sign up at greatcapitalllc.com. It's the best multifamily newsletter in the industry. You're not going to miss it if you're not signed up. But if you're listening right now, still on this YouTube show, you probably should sign up for the newsletter because you've been here this long, and we appreciate you because you are amongst the 7% that listen all the way through. Godspeed. Thank you. Catch you on the next episode of The Great Report.